Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we still expect to move to the downside for a wave Y, with the most common target area for a wave Y being around the 25k area. And this is also the problem of this scenario and lowers the probabilities, because if the most common target area for a wave Y is at the same level we've already tested before, it doesn't really make too much sense for me. However, this being an ABC flat structure is already invalidated, because locally we see no reason to think this is a 5-wave move to the downside. It's very horizontal, very corrective, so maybe a 3-wave structure is still a possibility in a wave Y, but then the most common target area has already once before been touched, so it doesn't really make sense for price to find support here once again for then a move to the upside. So therefore the probabilities of this scenario are lower. Now the high of X has to already be in this scenario, as we're looking for an expanding flat ABC with the most common target area of wave C being between the two 1.618s, with the upper 1.618 being very nicely respected. If we then go to the more bullish scenario, which therefore means has a higher probability as it stands with what we see also more locally, this is a wave 1 to the upside, followed then by a wave 2 looking for eventually a bigger impulse to the upside in a wave 3. Most common target for a wave 2 is between the 0.5 and the 0.786, taken from the low of Y over here to the high of a wave 1. And then a very rare target is the 236, that's only really hit and acts as support in a very, very bullish market structure. Now rare is the 382 and the 886, but as it stands now, only the 236 has been hit. And of course it would be nice for price to move to the downside and go to the more common target areas. The thing is, then in potentially a very, very bullish market, it is not that common price is going to give deep retracements and give people an opportunity to get in at lower levels, as then FOMO rises if price is going to continue towards the upside. I know people have been looking for around 20k, 23k as you look around YouTube, and if price is bouncing over here, all those people are gonna buy higher. Same with people that are now waiting for maybe a retracement. They might miss out if price is going to move to the upside, but of course we have to wait and see what happens more locally. Now in this particular scenario, price could still go further to the downside if this is the beginning of a 3-wave structure, with this then being, for example, a wave A, B, and then a C, so an expanding flat, or a WXY where we go towards the 382. And if I go out of the logarithmic chart, put on my support areas below price at the moment, we do have a blue target box in confluence with the 382 between 28.8k and 29k, and the 786, which is very deep though, between 26.2k and 26.4k, the other blue target box. However, we have wicked this low, which was a target we've been looking for a very long time, and so far price has bounced to the upside without a retracement back towards this low. If we then go to the low time frame structures, then the first structure that I have, the first scenario, is that this over here is then either a wave 1 or a wave C, right? With currently the probabilities, as mentioned on the medium time frame, being in favor of that being a wave 1 as it stands. This then being a wave 2. Now you also see FIB time, and time is important, and these FIB times are taken from the low to the high of then wave 1, or of course then wave C, but wave 1 in this scenario, as this is comparing the time it took to develop wave 1 with the time it takes to develop a wave 2. Now, this being the low of potentially a wave 2 from a time perspective would actually be very nice, as this low has been made between the 0.618 and the 1-to-1 FIB time, which is also a common target for the end of a wave 2. And if this is only the first structure of then a bigger 3-wave move, then we're going to get a very, very long and shallow corrective wave 2. Now that is no problem, because we always have the rule of alternation, meaning in Elliott waves, if wave 2 is very shallow and long, then eventually if we get a wave 3 to the upside and we go to a wave 4, then wave 4 tends to be very deep and short. So that is something to take into account. Now it is less common for a wave 2 to be very shallow and very long, but it is something we have to keep in the back of our minds, that this corrective structure might not yet be finished, and this is not the low, but we might still see a move towards the downside, for example to the support area that we have around 29k. If we then go to the second scenario, then wave 5 is not yet in. Now this is an alternative scenario, again because of time. This wave 4 is so big, we're not really seeing a great impulsive structure to the upside in a wave 5. It is weekend, which is known for ranges as well, so not like impulsive structures. You know, it's just currently an alternative scenario. This wave 4 is four times longer than this wave 2, and it is nice that the common target area for wave 5 is in confluence with the 2022 range highs for maybe a wick and more downside, but that also fits a more bearish structure like this and then an A, B, C expanding flat, where the common target area for B over here is just below the 2022 range highs for maybe a liquidity grab, closing below, and then a move to the downside in a wave C, which then this ABC could be part of a higher time frame wave 2, right? So then wave 2 is longer, might still be relatively deep, but it is definitely a longer corrective structure in this scenario. It can also still be a WXY if we're looking for more downside, but it all depends what's happening more locally. And at the moment, this over here doesn't feel like an impulse. It feels more corrective, what's happening on the lower time frames. The more bullish scenario, as mentioned, is that this is the low and you move up in an impulsive structure. So this is the low of a wave 2, potentially moving up for a wave 3. But if we zoom in, and I don't need any analysis for this, then what do we see, right? Do we see a very nice clear 5-wave structure to the upside, right, from the low? Because if we are looking for upside in an impulsive structure, the beginning of a bigger wave 3, we want to see an impulse. Now this looks very much like a 3-wave structure, and then we've been starting, like we start ranging, and we've started to range for a very long time already. It doesn't look like a wave 2 as well. It looks very, very corrective. And because this over here looks corrective as it stands, the probabilities are higher for price to take this low at least once more before returning to the upside. However, taking this low doesn't mean that price is going to go to the downside right now. It can still mean that price is first going to move towards the upside in either the WXY, where price already hit a common fib level for wave X. So yeah, the high of X could be in, would be a very short X, but could be possible. Or you get a bigger 3-wave structure for then a move to the downside in a wave Y, or this is an A, B, C. So even if price moves a little bit further to the upside, it doesn't mean we're going to start a bigger wave 3. And as it stands, again, I don't really see any nice impulsive structures on the lower time frames. Now, if we look at the CVD, then I already spoke about this CVD divergence playing out, and that is very nice, of course. However, there is still a bullish divergence between this wick low and the higher lows that are being created. And in Discord, in the YouTube Silver membership group, this very morning at 7 a.m., I wrote a post which I think is very important for you guys. So I'm going to read it here and then show it on the charts as well. So price, of course, is still hanging around the 30.5k levels. And we're looking at the 15-minute chart. You can see big bullish divergences on yellow and blue, but it is with the wick low made 2 days ago. However, I personally do not prefer CVD divergences with a big wick. So if we go to the 15 and I refresh the chart, then you can see over here we have higher lows on price, lower low on the CVD, the yellow CVD as well as the blue CVD if we look at the wick low over here. So bullish divergences on the chart, but this is with a very big wick, and I prefer to have bullish divergences not with a big wick, but a bit of like a solid structure, let's say, instead of a big wick over here. So what I wrote is, if we zoom into the 5-minute time frame, which I'll show you in a second, price so far does not show any bullish divergence with the wick low. It also looks less wicky on the 5 minutes, so I prefer to look at the 5 minute for potential CVD setups with the wick low, at least on the 15. But if I then move to the 5 and I go to the wick, you can see it's a little bit less of a wick at least, so it looks a little bit better. But if I then zoom out, then you can also see that the yellow line over here doesn't show any bullish divergence, higher low in price, but also a higher low on the CVD line. But also the blue line hasn't shown any bullish CVD divergence. The only bullish CVD divergence we had so far was between these lows, higher low in price, lower low on yellow, as well as on blue. So it is quite important for price to stay above these lows. So if price is going to drop below these lows, then these bullish divergences were apparently not strong enough. So the absorption that we had going on over here of market short positions was not big enough, not good enough, not strong enough, whatever, for price to continue towards the upside. Instead, it's going to find downside, which would be quite bearish, of course. Now, then finally, if price comes down and we are going to move below that bullish CVD divergence, an ideal scenario for me would be to see price moving down, have a bounce to the upside, and then see a retracement. And that retracement then creates local bullish CVD divergences. Of course, it depends on how price comes down. We have to wait and see. And this is then what I mean over here. So price moving to the downside below these lows over here. And then the only, like, even though it might create on the 15 bullish divergences, maybe even on the 5-minute, price might start to create bullish divergences as the CVD line will go down as well. Preferably, you want to see a move down, move up, retracement, local bullish diffs for then continuation to the upside. So meaning if we go to the 5-minute, price moving to the downside, the CVDs likely going to the downside as well, maybe creating bullish CVD divergences. That could be interesting, but preferably a move to the downside, a bounce, retracement, local CVD diffs, and then a move to the upside. That's something that can be interesting, but first it has to take these lows. Just above price, we still have the naked point of control as well at 30.6k to 30.7k for a little bit of resistance. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.